Well, for FX traders, it's really all about the US dollar. But with the dollar index down about 5% since late June, as traders really anticipate and have high conviction about the Fed going on an easing cycle starting in September, has that elastic band on the dollar just been pulled a bit too far? And Blake and I discuss all those factors as we look ahead at Jackson Hole with the great man, Mr. Jerome Powell, speaking, and will he give us that signal to potentially do some mean reversion trades on the dollar? We also have a look at the US equity market, which has run into a bit of fatigue at the moment, summer volumes kicking in, but we look ahead at NVIDIA's earnings next week. And can this be the catalyst, long or short, to drive volatility going forward? We also have a look at gold, which is sitting at all-time highs at the moment. We ask where that could be going. And of course, we've got to keep an eye on crude at the moment, which is coming to some massive, massive levels. It's time to go to work. This is the trade-off. Well, hi there, my name's Chris Weston from Pepperstone, and I'm going to be joined in 2 seconds by Blake Morrow from Forex Analytics. A lot going on in financial markets. There's cross currents taking place. We look ahead to Jerome Powell speaking very, very soon. And to bring Blake into the programme, how goes it, my good sir?
Good to see you, Chris.
That's good, mate. Well, there's a lot to talk about today. My banter's rubbish at the moment, so I'm just going to let it go straight into Market Pulse because I want to chew your brains, see what's going on with the markets, because I think there's a few things that we just need to explore at the moment. We're at a pretty critical juncture. We've got a North American summer, so volumes going through, the equity markets about a quarter or below where they were. But, there's still there's still money to be made. There's still risk to be managed and there's positions that need to be looked at. So let's go and check the market pulse. Right, let's do this. Okay, so we got the equity markets obviously had a nice rally recently, just running out a bit of steam. But the bulls will be feeling fairly comfortable. We've got NVIDIA earnings next week, which we can discuss. The rate interest differentials have been helping the US dollar to an extent, but the market's got really strong conviction that we're going to get a rate cut in September. We heard that in the minutes, last night or yesterday for you, or today for you. Most members are calling for a rate cut. The question is, do we get 25 or 50? I think the market really wants to see 25. 50 might be a bit too much of a shock. Why are they seeing that? Obviously, we've got gold at all-time highs, crude down in $73, looking pretty, testing big support levels. Volatility's eased off to about 15%. A lot of mechanical flows going in the market. How are you reading this all right now? What's the sort of thing that's catching your mind?
Well, let me first and foremost say it is summer, and you're right. In North America, we're at tail end of summer holiday season. A lot of Europeans are out for the entire month of August, and matter of fact, it's not just Europeans; it's a lot of the world. And so these moves that we're seeing, the problem that we have right now, Chris, is when you have a one-way market, which we do have, you are currently in process of witnessing. Markets can go a lot further than you think based on no one wants to get in the way. And right now the dollar is straight up breaking down. We have to have some conviction that the dollar is going to reverse. And until we see that, which probably has something more to do with Friday than anything. And we're going to talk about that obviously here in a little bit in a couple of topics when we talk about what Powell's going to be discussing. But right now you just can't get in the way. So it's like lack of liquidity. No one wants to stand in front of the train. You're either getting on the train or you're going to stand out of the way, and that's pretty much it. And so these moves have been pretty aggressive, wouldn't you say?
They have been aggressive, and maybe liquidity is definitely a factor that we've been seeing, as you say, that you get less liquidity at top of book, and you can move markets around a lot easier. But I think you've seen a lot of cash coming back in from these passive funds into various parts of the equity market. I quite like the interest in small caps at the moment. Have a look at the Russell. It's just filled the gap from the 1st of August. If we can break a little bit higher, I'll be chasing that move. I think maybe long small caps, long Russell, short Dow might be a trade. I think NVIDIA's next a really interesting one for the semantics. 7% of the S&P market cap, a bit more for the NASDAQ. The implied move next week for NVIDIA, Blake, is 10%. So the market's expecting a 10% move for a company with a 3.1 trillion market cap that could move 10% on the day. That's outstanding. It's astonishing to see that sort of stuff. But again, that could set off some cross asset moves. So in the after hours next Wednesday, I think 20 past 8 your time, Eastern time. If that was to move 10% in the after hours, then you're going to see Nasdaq futures rally, and that could have a big move on risk effects. The Aussie could rally. You could see a bit of move in copper and various factors as well. So I think that's a really interesting one to keep on the radar next week. And this is a company that always beats expectations. The question is you've got the sell side here. You got the buy side a little bit higher in terms of their expectations, and the market position just a bit there. So these guys have to just absolutely take it out of the park, but they always beat, right?
They do. And make sure you guys don't go anywhere, because we will be talking technicals on NVIDIA moving forward. So stick with the program. Chris, you talk about like things that are moving the market right now. I mean, the dollar is absolutely getting taken to the woodshed right now. We've broken out of this triangle, the consolidation that we've had most of the year. We've broken down the euros, as you pointed out in your intro. Euros well above 111, about 111.50. Looks like it's on its way to 113. What, in your view, has been moving the dollar? Because a lot of people were looking forward. A couple of days ago, looking towards this BLS, revision lower of jobs, which the high end estimates were 1 million jobs. The lower end was about 500,000, and we came in at 800,000. Obviously, that's a lot of extra jobs that were lost that the market wasn't thinking. But the Fed, they've been pointing out that we see this, and even Fed Chairman Powell's like some of those jobs reports might have been overstated. He said it in recent pressers. But then, is it maybe the Harris momentum that we see in the president? I mean, I know it's the DNC right now, and we just came off the RNC, but maybe 2 or 3 weeks ago, and it's typical that you're going to get this spike higher in momentum when you have the conventions. But maybe is it a little bit of that's weighing on the dollar? I mean, you look at Harris's policies, or is it too early? Too early. Because I think it's too early. I mean, we can talk about this, but I don't see like the data materially just breaking down in the U.S. where it justifies, especially on the heels of PMIs that are coming out tomorrow. So what are your thoughts on the dollar here on this big breakdown?
Well, I mean, I think if you had the exceptionalism story being called back into question again, and the rest of the world growth better, then the dollar would be getting sold even way more aggressively than it is, and that's not happening at the moment. In fact, people are saying, the dollar's being sold because the Fed are about to start cutting rates. But if you actually look at relative rate settings, what's being priced in the US relative to Europe, they've just been going sideways. So we haven't necessarily seen that relative rate setting justifying the sort of. So I just think that this is a positioning shift. I think it's a portfolios. Maybe the equity market rallying is causing the risk on is causing people to sell dollars, but then we're seeing buyers of yen, and that doesn't really make a lot of sense there either, to be honest. So I think I think this is a market that's gearing up for rate cuts. We're not seeing the rate spread differentials to the degree we'd want, but I think the market's just running it short into a Fed easing cycle. Correlations have broken down to an extent, but the question now is, has it just gone too far? Is that elastic band just pulled far? We can look at trades around that, but clients here are just are piled into the US dollar now. They're seeing that risk reward just change. I mean, I think you can't chase the dollar lower at these levels. I've got to wait for a bit of a snapback, at least just a bit of a mean reversion mode. I think we're there, but it's a tough one. You're standing in front of a freight train right now, aren't you, Blake? But it feels like it's a little bit overdone. 1 month risk reversals for call volatility are trading at the biggest discount for put volatility that we've seen since 2020. There's so many metrics that I'm seeing that's showing the dollar is just so underloved that it could easily snap back here.
Well, maybe it could be as early as tomorrow. But one of the correlations, you say a lot of correlations are broken. One of the ones that aren't broken or is not broken is gold. It's trading at all-time highs. You got gold at all-time highs, and that's something that I was looking at the week ahead video. I'm like, wow, look at gold breaking out. This should send the dollar down. But you're right, the dollar, a little bit of the elastic band might be pulled a little bit too far, and if you keep pulling it, it might break and snap and go the other direction. But what do you think about this gold trade as we are hovering above 2,500? Doesn't look bearish.
Doesn't, no. And we've seen a couple of times this week the market trading below 2,500, and the buyers step back in, and there's been a couple of chances to let this roll over and take profits from an overowned market, and the buyers have stepped back in. Maybe that changes, but there has been really strong underlying demand to buy gold in most currencies. And I think it's there for chasing. I mean, if we're to see a break of 25.20, then I think that the momentum guys are going to be in there, systematic guys, and I think I'd be chasing that higher, to be honest. So it's here for a reason. There's the thing with gold, we can pick out whatever. Is it rate cuts? Is it people weighing gold in their portfolio against potential economic fragility, potential geopolitics? Blah blah blah. It can be any of them. The reports that the Chinese are going to start buying gold again. The banks have been given new quotas, import quotas. So China's been a big influence this year. You can pick any reason. It's anything that's plausible, but it's here for a reason, Blake. And I think it looks pretty good. So the question then to you, I'm just throwing this one back to you while we've still got a bit of time. With the dollar in focus, oversold, maybe rightly so. Gold at all-time highs. I mean, my personal view on Powell is that he's going to hit the market pricing bang on. We've got 30 basis points of cuts being priced for September, so 25 basis point fully baked in, a small chance, 20-25% chance that we get a 50 basis point cut. I think he's going to hit that pricing pretty much spot on, maybe sort of veer closer towards 25, and give himself maximum optionality. It shouldn't, in theory, be a volatility event. That said, we've got some extreme positioning coming through, so it could easily move markets. Where are you seeing the risk, in terms of what Powell's going to be saying at Jackson Hole?
Well, I don't think he's going to say anything that's groundbreaking. But the question is, Chris, does the market want more? I mean, if we walk away from Friday thinking, he still is really damn hawkish. I mean, you look at, you could argue, some of the labor data is starting to show some weakness. We got these revisions, but CPI continues to drop. Yes, inflationary pressures are there, but realistically, Chris, it's like, is the economy looking so bad where he needs to really swing the door open for a possible, half a point cut? And maybe that's what the market wants. And if the market doesn't get that, do we get a little bit of a mean reversion or a little bit of a knee-jerk reaction?
So I think if you use 25 basis points as your central point, does his conversation? I mean, he will open the door to rate cuts. He's going to say, we're at a position now where we can start easing. The question is the tone more skewed towards, you're in a position of coach, but things are okay. It's the totality of the data we're looking at. And the market says, actually, that's 25, but more skewed towards, higher for longer, or 25, but more skewed towards, we could go higher, maybe 50. That's where it is. And I think that's where the fine balance is in market. It's going to be hit 25, but is it more skewed towards, we're not in a rush. We'll start easing, but the data's going to hold a hand, getting towards that side, or is it more we're in a more slightly urgent position? We want to start getting the Fed funds rate down sooner, and that's where we get that. That's where I think we could see some moves in the dollar and gold.
So the pricing of 25 for the remainder of the year, if it looks more like 50 by the end of the year,
we've got 100 basis points of cuts being priced in by the end of the year, by December. So somewhere along the lines,
75. So it's not 75. No.
Well, the swaps pricing, it's 100 basis points by December. So, somewhere there needs to be a 50 basis point cut in that mix.
Well, I don't think Fed Chair Powell is going to give us that.
I don't. So, there's your risk.
And we move along.
Let's go to setup. You can't lie with the technicals. All right, let's go to our good friend Crude. Blake is a bad trader at Crude, but can call it well. He says it every time. And I'd be interested to see his opinion because, like we talked about this one last week. It was my play of the day, and it's working, and it's just came into that supply zone. It's kicked back down, but we're now into some really, really big levels, as you can see here, just on that orange rectangle box at the bottom. The back in June and August, big reversal. Everyone loves trading V-shaped bottoms, but the really strong buying coming into these levels. So it has been an area of good demand before, and of course that's what we do in technical analysis. We're trying to find repeatable behaviours, we're trying to find repeatable patterns. I know two's an insignificant sample size, of course, but you know, we are simple beings when it comes to this sort of stuff, and we're trying to see if the market can bid into this again, or whether those buyers step aside and this time is different, and that's where we are right now. So there's not a trade in there for me. I mean, obviously a scalper, you could probably be taking up 50 pips or 100 points or so, and trying to just move that one off a quick move. But yeah, for me, this is a really key one now. The demand side has been crumbling, or the perception there's been because of China. We've seen that in some of the agencies who've been cutting their forecasts. I'm not saying supply is necessarily increasing too much, but look, I mean, that is a clear chart for me, and we're at a strong inflection point. And you know, if we break through these levels, come back for the retest, obviously breakouts are, you know, how you trade them. You know, you could easily be looking at $68 on this one, and you know, I think that would have big implications for global markets.
All right. Well, I tell you, it looks weak, Chris. And the only thing I wanted to add here is, you know, we get a solid break of that 71.50. We should trade sub $70. And I've been scratching my head the whole time. It just won't stop, can't stop, won't stop. It's just nonstop selling, especially with all these heightened risks around the Middle East, which I'll talk about here in a minute. But first, before we do that, let's talk about the breast top in NVIDIA. Now, you know, the first thing I said to myself, Chris, is I have to stay classy, San Diego, when talking about the breast top.
80% of the time it works every time.
If you don't know what I'm referencing, you know, maybe the producers at some point will pull up the infamous picture of Jensen signing females' breasts, and I said, excuse me, at the time that we're at the breast top. Anyway. Right now, we're at a really big inflection point, I feel, for NVIDIA. So are we going to create lower highs? Excuse me again. I'm sorry about that. Are we going to create lower highs? Or are we going to turn lower? Or are we going to hit new highs? And that probably has more to do with earnings. So between here and the 50 DMA, that's close to that 618 retracement around the 125 level, I think that's where really key support is. Whether we go through highs or whether we turn lower is going to have more to do with earnings. I do tend to favor that the highs are in, but again, as Chris pointed out, you know, betting against NVIDIA is a very difficult thing, but the volatility event that we're going to have next Wednesday, so we're going to be filming after NVIDIA earnings next week. That's why I wanted to bring this to your attention today. So, you know, I think it's a decent setup if it's going to create a lower high, Chris.
And it'll be different by the time you get to next Wednesday as well. But the thing is with NVIDIA as well, I mean, you know, it's not just trading the earnings and the guidance for Q3 25, which is the next period, but it's also, you know, then Jensen Huang. I mean, like if there's ever a CEO you want talking to the world after, you know, you've just reported earnings, it's him. I mean, he hits the sweet spot every bloody time, right? He just knows what to say to move the equity, you know, higher. But there are some, I think there's you know, people are worried about peak margins. Blackwell has been delayed. How's that impacting their revenue numbers? You know, they've de-risked their China business. I think China's about 5% of the sales, so that's not really an issue anymore. But, you know, the Blackwell delays, there's plenty out there for people, but, you know, that's not really what we're trading. You know, if you are trading NVIDIA and you take those time frames down, there can be a lot, yeah, you can get some really nice movement in that and some really good trends. So I think it's a great trading stock. Let's go into copper. Be interested to know how you've seen this one as well. I mean, look, we have seen a better tape coming through in Hong Kong and China in terms of their equities recently, and I think that's probably been somewhat correlated with what we've been seeing in copper. We've had a little bit of a bounce back in iron ore futures, the Dalian exchange there again, which is maybe oversold. It's been underloved, but yeah, there's been some infrastructure sort of headlines that have made their way down. But I think copper's an interesting one. Obviously, we made this series of lower lows and lower highs. This downtrend's been in place for a while. You can see the rate of change has just started pulling back as we go into that horizontal resistance level. So we are still working quite dynamically within this bear channel that we've been playing. The question now, is this the time to sell? We've had a bit of a rebound off the bottom of that channel. We've come into that previous high, you know, the horizontal resistance. Make or break. If we get a breakthrough there, I expect to see a top of the channel, and then maybe, you know, potentially a counter trend taking place. But, you know, for more aggressive traders out there, maybe look to start fading it at these levels with a very tight stop, see if it breaks through that resistance level. But it's a really interesting chart here. You know, if you're trading FX markets, the Aussie looks at this one reasonably closely. Go into the LATAM FX, the Chilean peso, looks at this very, very closely. So I think, what the copper market is telling you about China and global growth is a really important one. But we are at an inflection point, as you see. Do we sell it now? Do we rally? I mean, wait for the price to sort of give you some clarity on that one. But I think it's a really interesting chart there.
Well, Chris, since you asked for my opinion, I'm just going to give it to you really quick because as a trader, what we really can control is our risk. So when I can look at something and say, all right, well, if it breaks down from here, my stop goes above that resistance level or above the channel, I know exactly what my risk is. And if you're going to play a breakout and you're waiting for it to break higher, then as soon as it breaks higher, then you put your lows below like the daily lows, for the last couple of days. And being able to manage your risk around a setup like this, I think is paramount. And that's what you brought to our viewers today. So kudos on you and nice setup, Chris. I like it. I really do. All right. So the last one I want to bring in my second setup is going to be the Euro Swiss. And I, if we go back to the beginning of the year or the end of last year, Chris, and we talked about being short Swiss being short Swiss francs, long euros was the trade of the year. I know you played it, I played it. And I know a lot of our viewers played it. It was awesome. And I always talked about buying it back down around these levels. So when we hit fresh lows, I actually turned around, went long, and it did a false breakout and we bounced. Now you'll notice that we're capped by the 200 DMA, the 50 DMA, the 618 retracement, the 50% retracement of the longer trend lower, and we're moving lower right now. I don't know if you caught this, but Secretary of State Blinken, he was in the Middle East, probably doing a little bit of a, hey, look at us go, ahead of the DNC, and he's walking away empty-handed. No ceasefire. As soon as he left, Israelis started striking Gaza again, and things. If you look at the Swiss franc, it's had this insatiable bid, kind of like the yen. So if things start to heat up, Chris, and we stay below that 200-day and 50 DMA, we start breaking below 94, I think it opens the door back for a retest of 93, maybe sub 93. So I think there's room to move lower once again in the Euro Swiss, and I'm not a buyer this time.
I'm a seller.
Yeah.
I'm short. I put out in a note yesterday that Euro Swiss shorts are the way forward, and the market's still short with Swiss franc as well. So you've got a positioning that can still readjust. I think this is pretty clear cut. I think like Euro Swiss is goes lower in my opinion. Nothing's clear cut, but it feels like when you're looking at the balance of probabilities, this one trades lower in my opinion. So yeah, good setup, and I was thinking about this as a play of the day, which takes us to our next section. Ta-da! Play of the day. All right,
man, you're smooth, Chris. You are smooth. Smooth operator.
Right, let's go to euro dollar. As I say, this is really it's like gambler's paradise now, isn't it? I mean, do you want to step in front of this move? It's parabolic. It's just been such a breathtaking move, as we've seen with cable and dollar yen and all these factors. And look, but I think when I look at all these oscillators, they're at extreme levels at the moment. The optionality market skew is at extreme levels. I feel like there's for me now. There's obviously no way I'm chasing this one long. So for me, it's either stay out of the market and just wait for the pullback. But I feel like the time now, the risk reward has changed. Substantially now to the point where I quite like shorts just to stop above that recent high 11.74. So I'm taking very small risk, taking the position size right down because I know I'm fighting a massive trend here, and that's not what I do as a trader. Typically, I like to be above the 5-day exponential moving average, but I feel like the risk reward now is cross options positioning, and what we're talking about there with Powell, where 30 basis points are priced in. I think he's going to lean more that way. There's enough stuff in there to have a special tactical trade. Just to try to take 70, 100 pips to the downside, trade with a pretty tight stop just above that recent high of 111.74. It goes against everything that I believe in, but I just thinking sometimes there's that you can take tactical trades. which just look at all the risk rewards, and I think it's just skewed now. So there's probably going to be people watching this in 4 or 5 days' time, and this trade will be over because it's going to be a very short one. But I feel right now the odds are heavily skewed now to just having a bit of a 100 pip to rip, 75, 100 pip rip to the downside, where it will probably turn again.
Well, Chris, I guess then my play of the day is going to complement your play of the day, because I'm looking at the loonie, and I got to say, you guys listening in, if you're a market maker in the Canadian, you got me today. I actually had my stop below 135.90 on a cheeky long, playing against that 136 level. And I looked at my phone, got stopped out. I saw one of my orders got triggered. I sat there, waited for it to create a little bit of a low, and I turned around and went long because, we popped back up to 136. And frankly, I felt like it was a stop run where I got stopped out. Now, my stops aren't far from the lows right now, but if we get back above 135.50, see, I try to put myself in these smaller positions. And if we break back above 135.50, because let's say we have a hawkish Powell on Friday, or maybe Canadian retail sales, shows some weakness or whatever on Friday as well. We get back above 136.55. I'd be adding to longs above there, looking for a move back up to the 50 DMA. But I'm playing this already, Chris. This is my play of the day, and it just happens to complement your play of the day. And we could end up getting stopped out really fast. That's the risk that we take as traders.
Write it off, mate. Write it off. It's not. Anyway, these are interesting times. We've got summer volumes playing through. We've got the dollar, which has been crumbling, but it's oversold. We've got gold at all-time highs. Can we kick further? We have to see what happens, obviously, with the dollar and what happens with bond markets. We've got Powell coming up quite soon. We've got NVDA earnings next week. Low volumes, but there's a lot going on. A lot of markets